Meanwhile, financial software firm Intuit beat first quarter estimates, but struck a cautious tone for the next quarter. Intuit is known for TurboTax, QuickBooks, and Credit Karma. And for more, let's find out from Rishi Jaluria, Managing Director covering software for RBC Capital Markets. And of course, Barry Schwartz is still joining us here as well. Rishi, it's good to have you. Thanks for taking the time.
Thanks so much for having me. Always great to be here.
Okay, so revenue and earnings beat. So what do you think drove the quarter this time around?
Yeah, look, I think it was a pretty broad-based beat, and that's always great to see in a business like Intuit that's pretty diversified. You saw good strength in the consumer business, right, including Credit Karma, QuickBooks Online, which is their accounting software, that did really well. MailChimp remains a drag, but it was a pretty broad-based beat. You're seeing, potential for them to get towards their long-term targets. And by the way, I think one thing that's starting to help them is their AI-forward strategy, right? Not to say that they're monetizing AI in a huge way today, but it's definitely helping in terms of getting customers on the platform, in terms of driving usage and adoption, and really feels like this name is set up for continued double-digit growth for a while.
Is that why you think investors seem pleased with the results? And also, like guidance moving forward is a little mixed, but that AI spending and pledges, do you think that helps?
Yeah, I think it does. And look, I mean, the guidance still has the issue of the drag of MailChimp. But if you strip out MailChimp, I would say numbers are definitely better than what people feared. And, obviously some of this is going to hinge on what happens with the tax season in calendar year 26. But I think people are just generally pleased that you're seeing, better than expected growth. The guidance still does seem conservative. Management is striking a pretty optimistic tone around their ability with AI over time. Again, I think that's more of a longer term growth driver than something that you hang your hat on immediately, like a Microsoft type name. But I think it's a combination of all of these that gets investors really excited.
Rishi, you've seen a lot of software companies been under pressure over the last few months. Here in Canada, we have Constellation Software, where its stock has been absolutely brutalized, as well as Salesforce and Adobe. But these companies there's no near-term impact whatsoever from AI for these companies. In fact, some of them are showing accelerating revenue growth. Some of them are 18% revenue growth from Intuit. That tells me that no one's switching. Everybody's using their products. What is it going to take to change the narrative on some of these software companies, especially with Intuit?
Yeah, I think that there's two things that need to happen. And, I'm just coming back from our own global tech conference that RBC hosted out in New York. So this is very top of mind. But I really think there's two things that need to happen. Number one is we need to see further acceleration in growth, right? I mean, most of these names are seeing decelerating growth. And so we need to see a little bit of an acceleration in growth. And by the way, if we look at how management tones are, if we think about net new ARR trends, like it's not out of the realm of possibility that we could start to see a little bit of acceleration in some of these names heading into next year. But then I think the second thing that needs to happen is we need to get through this AI is the death of software narrative, right? That's really what's going on out there. Is there's worries that either OpenAI is going to subsume some of this functionality, or we're going to see situations where there's just no barriers to entry and people build this themselves. But I think as a lot of these incumbent vendors, whether it's an Intuit or a HubSpot in sales and marketing software, the more that these companies can show that their own AI solutions and products that they've built into their platform are not only generating real use cases and generating value for customers, but customers find so much value that they're using them more often and eventually willing to pay for them, right? I think it's very much a crawl, walk, run approach, or our framework we use is innovation, utilization, monetization. When we talk about AI, it takes a long time for it to show up in revenue numbers. But as soon as people start to believe that a lot of these incumbent software vendors have good quality AI products that customers get value out of and are willing to pay for, I think that starts to drive sentiment a lot more positive.
So you, of course, have a buy rating on Intuit. What is it that you like about the stock? I mean, we've talked a lot about its, investments into AI and the future of AI with Intuit. What else do you like about it?
Yeah, look, I think there's really two things that I like. Obviously the AI roadmap and innovation I think is fantastic. But look, within the core TurboTax, I think that they have a really strong position, and there's a lot of room for them to grow there, especially if you think about upgrading of tiers, the live business where you actually have human agents and maybe over time AI agents. that can help you or even do your taxes for you. And then on the QuickBooks side, I really like the move that they're making more up market, right? I mean, still going to be much smaller companies, but Intuit Enterprise Suite to go after much more complicated businesses, companies that have, 100 people, which has typically not been their bread and butter in the past. I think it gives them great expansion opportunities. Over time, I think we can see a little bit more international as well. I think there's just a lot of really great growth drivers combined with a market leadership position in both of these markets. And then you layer on the option of AI and what they can really do with AI agents, given all the data and context they have. And I think there's a very compelling long-term story here.
In the past, Intuit has been quite acquisitive. Do you see more acquisitions coming? And of course, I see with your buy target, you see a pretty healthy upside. And but are you using multiples that may be, last year's type multiples? Clearly, the market doesn't want. You talked about, of course, the AI narrative has to change, but clearly the market doesn't want to pay these type of multiples right now for software companies.
Yeah, absolutely. And look, I'm a very long-term focused investor. So, we have multiples, but multiples are ultimately a shortcut. I always think about like, what does a robust and thoughtful long-term discounted cash flow tell us? And that's kind of what's helping me get to the price target that we have out there. In terms of M&A, look, I think the answer to that is outside of tuck-ins. I mean, don't get me wrong, small technological tuck-ins, things that can bolster their AI capabilities. Absolutely. I think that most investors would be okay with that. What I think investors don't want is large transformational acquisitions, anything the size of Credit Karma or MailChimp. Look, MailChimp is still a drag on the business. It's a tough slog out there. They talk about returning that to double-digit growth, but the market is skeptical, and I think rightfully so, just given the quality of the assets. So from here, I think the M&A will be more focused, technological, accelerating the AI roadmap. I don't expect major acquisitions like what we've seen out of those two.
Okay, Rishi Jaluria joining us live this morning. Thanks so much for your time. Really appreciate it.
Thank you.
And that was Rishi Jaluria, Managing Director covering software for RBC Capital Markets.